Hey, what's going on, guys? Hopefully, you're having a fantastic Saturday. I'm so glad that you're here. My name is Derek Clifford. I am the founder and CEO of Elevate Equity. And today we're going to be talking about a very important topic, which is that real estate investing can be done in different time horizons, a short term, a medium term, and even a long term. And so we're going to define what those are and what techniques investors use to fit inside of each of those timeframes, and then help discuss the pros and cons of each of them really quickly within 10 minutes, so that way you can get a quick understanding of all of the techniques out there and investment strategies that you could employ to help you get to your goals. So the first thing is, I'm going to define what short, medium, and long term means. Short term means up to eight months in my book, and then medium term means between 9 months and 2 years. And then, of course, long term means 3 to 7+ years later on in the future. So, first, what we're going to do is we're going to start with what is short term investing. So, again, this is up to 8 months. There's a couple of ways you can get involved in short term real estate investing. The first way that I know of is wholesaling, which is basically finding distressed properties that are out there and somehow connecting that seller or someone who has a problem, like say they have a death, divorce, or something like that, and they need to sell the property quick. If you're able to connect them with a buyer, then you should be able to make a profit from the sale versus the buy, right? So whatever that delta is, you should be able to share in some of that with the buyer, so that you both are getting value for that. And your job is to find properties like that, and you do that over and over again. So that is wholesaling. Flipping is just as it seems, and just as you probably know from those TV shows, HGTV and everything, you buy a distressed asset and you go in there with a rehab budget and you improve it. You deck it to the nines. You go ahead and go in and redo walls, redo plumbing, get everything to make it look really nice. And then, of course, you put it back on the market after you've bought it at a discount and put some money into it. And then by the time you sell, you should sell for more than your purchase price plus your rehab to make a profit margin on that sale. Okay. The other thing that's maybe not so mentioned on the short term is private lending. So you could be one of those folks, if you have some cash, that you can lend out to people who are doing either flipping or wholesaling, and you can get involved that way. So depending on the length of the investment, you'll get paid for being the lender behind that to make that all happen with the cash. Okay. Some pros behind this is that you're less prone to market cycles. I'm not saying that you aren't completely immune to market cycles, but you definitely are less prone. You can control the asset directly in terms of taking care of what needs to be done from a rehab point of view. And then, of course, everything is quick. So you get cash in, out, and you don't have to deal with tenants at all. Usually it's just you get in, you deal with the asset itself and the construction of it. And if that's your game, then you get to profit directly from that. The cons is that it can be kind of risky, and there's a lot of hard effort that you have to employ up front, and it's very time intensive for you. So it's very urgent, and everything is kind of dependent on one another when you're doing this type of thing. And so it can be almost like a second job to you. Okay. And the last thing to mention too is that there's really no tax benefit to doing it this way, because if you do properties and you buy them and sell them within a year time frame, the IRS considers it an instrument, which means that you have to pay capital gains on it, and there's really kind of no way around that. So that is the short-term method of getting into it. For medium term, there's not so many techniques here for this, but I'm just going to go ahead and mention a few anyway that I know of, and that is the buy and hold, the BRRRR strategy. So the way I look at this is, yeah, it could be a longer term type investment, but the way I think about it is like, what are you going to do as a portfolio? What are you going to do over and over again? And with the buy and hold portfolio, doing the BRRRR method, you're going to do your value add right when you get the property. You're going to rent it out, and then eventually you're going to either refinance or sell that property. And usually these are like C-class properties that have a lot of work that need to be done to them. So you're going to do the work and then add the value and then flip them. But you'll have a tenant inside, so you'll be able to sell to another investor, or you'll be able to sell to yourself, which is to do a refinance and get your money back out. Okay. And then the other thing that I would mention too in the medium term is note investing. With note investing, you can trade paper on private notes. So let's say that you do something like this BRRRR. Well, if there's an investor out there who has cash, right, they can actually take that underlying note and then sell it on an open market. I'm no expert on this, but this is one way for you to be able to trade notes within, a 9 month to 2 year time frame. If you want to diversify yourself, you can get different types of debt or different types of coverages. So I just know that that's out there. And some pros for doing this medium term type value add or type investment strategy is that you'll have more flexibility. You'll have a stronger understanding of the short and the long-term market dynamics because you're doing kind of both. You're doing the value add and you're also holding and putting tenants in place, right? And then you also will have multiple exit strategies. So you can sell the property off at the 2 years or 3 year mark or whatever you consider to be a medium term. And then it can be repeatable. If you do the Burr strategy or you do note investing, it's very easy for you to do this because you're going to build up a system that will allow you to scale quickly and be able to recycle some of the cash that you've earned in buying more property. Okay. And so that's really what I like about that medium term investing. And then the last thing is long-term investing, which is 3 to 7+ years. Now, again, I want to mention buy and hold once more because that's the business that I'm in. And I think that you could take a medium-term type asset and then convert it to a long-term asset if you like it, right? But the whole point behind the medium-term assets is that you can basically add value to them. And then after 2 years, you can sell them because you bought them in the right areas, right? So with the long term, that's not necessarily the case. Like you could buy these Burr projects from the medium term and then just hold them and turn them into a long-term asset, which is what I highly recommend. Or you can go in and basically just throw a dart, into one of those really expensive areas and just wait for appreciation. I don't recommend this completely. Like, obviously, I'm simplifying this a lot. You need to do your homework and make sure you're buying the right property in an appreciating market because it's going to be expensive and you may lose money as soon as you first start out. But over time, it's going to pay out because rents tend to increase and so do values while your debt stays fixed. So these momentum plays in strong, desirable areas with low cap rates is going to be one way for you to really win. Okay. The other thing for long term is syndications. Now, I know that syndications sometimes don't go longer than 3 years, but you should walk into it with the expectation that it's going to take longer than 3 years. Unless you're going to be going into one of these high growth appreciation markets where it's a value add and then we're flipping apartment buildings, which then I would say use the medium terms criteria to help make your decision on what to do. Definitely, most syndications that I know of are anywhere between 3 and 7 years for hold time. And during that time, you don't have really the control over it, but you're partnering with people who know exactly what they're doing and they have a great business plan. And hopping on board their ship to sail along with them is always a smart move. And so some pros is that you have huge tax benefits if you invest long term. Okay. You do have a lot of heavy lifting up front to do, but then it becomes mostly passive. And then you can pick your exit strategy if you're under control, if you have control over it. And the other thing I like about long-term investments is that you can scale them very quickly. As soon as you know exactly what you're trying to buy, right, you can get into them fairly easy. And then you can just basically work that scale. And it's going to be mostly hands off after you do all of the heavy lifting up front. Okay. Some cons, though, is that, like I said, you maybe have a lack of exit strategy or control, and you will be very dependent on a team, which actually could be a pro for you depending on where you are in this specific topic, right? So that being said, that's everything real quick. It's the short, medium, and long-term investment strategies that I've known and I've worked with over the course of many years. And so my question to you is, what works best for you? So I'd take a look back in this video again, one more time, try to figure out, what tax advantages do you want to do? Or do you want cash? Do you want cash flow? Do you need control? Or do you want to be active? What's your risk tolerance like? All these things kind of brew around a little bit, and then eventually you'll kind of triangulate around what strategy makes the most sense for you. So I hope that was useful. Thank you guys so much for tuning in. And if you have any more questions, please reach out to us or click the link in the description here. There's going to be a ebook in here that basically shows you 7 ways that commercial real estate can help build and preserve your wealth, and plenty other goodies in there as well. If you go to our website, we have podcasts, we have videos, blog posts, we've got everything for you to help you get started on your journey, especially if you're looking for an experienced syndicator to partner with in some really high growth market areas. So we're looking forward to hearing more from you. Thank you so much for tuning in, and you guys have an awesome weekend, and we will see you next week.